Y'all, your boy Detailing back at it again with another video. This video where we're going to be talking about is SPY, triple Qs, volatility, the key levels we're reaching right now. What's going to happen with the market as we reach these key levels going into next week. Then we're going to talk about a couple key names to look out for going into next week, and then also the levels to watch for AMC, and actually go over what's happening with the AMC in a way that most people can understand. All right, because there's a lot of noise happening with AMC, so I want to try and put my spin on it so you guys can understand it a little bit more. But yeah, let's get into it. So the first thing to understand is what happened with the SPY. We look at the SPY because we use it as an indicator of what's going to happen within the market, and the past week has been just nothing but volatility. In the previous videos, we talked about how the 417.90 is a key level to watch, and luckily we held that level as we gapped down. Those previous days before that gap down, we had a lot of volatility going up, holding that key level, going up to touch the 420 level, running up, getting slammed, making a doji, gapping below it, and then running back up to hit the all-time highs, which is just crazy. Being able to reach the all-time highs and then falling all the way back down to 416 and then coming all the way back up to 422 is just crazy volatility, and that volatility is increasing as we reach the higher levels. The higher we go, the more bears are going to step in. The lower we go, the more bulls are going to step in. So there's a fight as we go either below or above that level. But as long as we're above the 417 level, we're pretty bullish, and that means stocks are going to start running. So going into next week, the level we're going to be watching is this key level of 422.60. If we're able to break that, we could possibly go higher and reach this level of 426.82. Here within our Discord, we are letting our members know there's a potential crash going into June or mid-June that could possibly happen. But as we go, what we're doing is watching these technical levels, and the higher we go and the closer that we get to the level 426.82, the higher the chances of that pullback coming. So we definitely are going to be watching these levels and scaling out of our positions to make sure we're securing profits before that crash is upon us, actually. So now let's get into the triple Qs, okay? All right, so just like the SPY, the triple Qs did have a lot of volatility. The key levels that I was saying to watch for the triple Qs is the 332.73 level, and we were hovering within that zone for a little while. We broke below it, gapped down, almost got into the box of 427, but then the bulls stepped in, pushed it higher, and made it run all the way to the key level of 335.60. And the key level to watch was the 334.95 break. As soon as we broke that, we started to consolidate a little bit. So going into next week, we could possibly hold that level of 334.95 and then maybe even break the level of 336.43. So that's going to be something I'm going to be waiting for. As soon as we break those key levels, my next targets are going to be 339 and then maybe even a break towards the 340 level. As you see the triple Qs breaking, you should definitely keep an eye on the tech names like Apple, Tesla, QCOM, and all the other names that are associated with the triple Qs, because as soon as the triple Q starts to break this key level, so will the other stocks. But as soon as we reach this key level of 340 and 342, just understand volatility is going to come in. The bears are going to try to push the stock lower, and there's going to be a lot of crazy movement within the stock market itself. Okay, now that we've covered the ETFs fairly quickly, we're going to get into the two names I'm going to be watching going into the next week. So the first name to watch going into next week is going to be JD. First thing to understand is it was getting basically pummeled by this 8-day EMA, and then finally these past couple days it consolidated on that level, ran up, got hit by the 200-day EMA, and now it has a pullback holding it above this key level of 75.15. It's a key level because if you zoom back, you can see the consolidation that it had within this zone before breaking out. So if it holds this level and consolidates, we could possibly see it breaking out towards this level right here of 85. 85 was a key resistance for it, going higher and also going lower. As you can see, it came back to test that 85 level. So the 85 level is going to be my target if I do enter any positions, but it's definitely going to be on my watch list going into next week. All right, so the next one is going to be Boeing. You can see how it ran up. Now it looks like it's going to be consolidating on this level between 247 and 250. This is a key level because it has a consolidation zone right here. So within this level, it's going to make a decision if it wants to go higher or lower. And by make a decision, I mean the Bulls and the Bears are going to pick a decision for it. If the Bulls win, we're going to be going higher towards a target of 268 and 275 level. But if we do break lower, we can come back down and have a gap fill of the 242. But I'm very optimistic on a lot of the stocks that I trade. I'm mainly trading calls. So for Boeing, I'm definitely going to be looking for a call position as soon as it starts to consolidate and I see movement going towards the upper end of this box right here, which is the 250 level. As soon as it breaks below it, I'm most likely going to be getting into calls. The 247.19 is going to be my target entry for the long side. So that's going to be something I'm going to be watching going into next week. All right. So for all the apes and, the bag holders, let's talk about AMC. What's happening with AMC? Is a squeeze going to happen? Has it already happened? And what is a naked short, and so on and so forth. So let's get into the charts, talk about the technical levels, and then get into what is happening with these short positions. All right, so before we talk about what's happening on the upper end chart, let's talk about what I said previously. I said as soon as it reaches this key level and it starts to consolidate and you see a pullback, it's most likely time to take some profit. But as we got to that level of the 20 strike, it looked like it just completely blew straight past it. And I said if it blew straight past it, my target is going to be that $30 strike level. And you can see after hitting that, peak of 36s, came back straight down to the $30 level and then fell back down to 25 and then tested that level of 30 again before gapping up and running higher and higher. So just a crazy movement within the stock itself. But now we're getting into the point of asking ourselves what is going to happen going into next week. First things first, let's talk about the key levels to watch. The first key level I'm going to be watching is going to be the level of $50. That looks like that is a zone where the Bulls and the Bears like to take action, and we're getting to that point. The pivot level is going to be the 42, or you can even say this wick right here of $37. Basically, the pivot level is where the stock falls, and if it breaks that level, it's going to have a volatility break down all the way down to the EMA of 26 or back up to the key resistance levels. But we're not there yet. Right now, we're at the $50 level. So going into next week, if we hold this uptrend and then we break that $50 level, most likely we're going to see an upside. So that $50 level should be an entry. If we continue above that 50, the next is going to be 53. You can even say 54. If we break that, that downward trend, we're going straight to the level of 65. And if we break that 65, we're going straight to the moon. Usually how you should calculate these types of ascending triangles is by taking the percentage of this side right here, of this leg, and then putting it on this edge right here at this entry, and that's what you should get, okay? But right now, since it's a weird type of stock to trade, you're trading volatility. You're going to be trading based on the resistances, which are going to be first this level of, what was that, 54. Then we have a break of the 57. Then we have a break of the 65. All right. So those are the technical levels. Now let's talk about what is going on with the fundamentals in terms of what is happening with the short positions that are happening within the market. So just an understanding, let's talk about what are shorts. So shorting a stock is basically borrowing shares that you don't own and selling them at a specific price, right, in the hopes that you're going to be buying them back at a lower level to cover your position. So basically selling positions at $65 as you borrow shares from the brokers, and then hoping that the stock is going to fall so you can buy it back at a cheaper price. And then you're basically going to be taking profit of that difference. It's basically for people that see a stock that's overvalued and you're like, dang, I wish I bought it at a cheaper price so that I could have sold it, right? But now you're taking advantage of the borrowing from the brokers and then selling it at at the current level and expecting to buy it back at a cheaper price. Okay. And usually you have 3 days to cover. And when you do cover within those 3 days, and that's just considered shorting, right? Then it's closed. That sale is closed. You bought them or you borrowed them, you sold them, you have 3 days to cover, meaning you try to buy it back within 3 days of shorting it. And after 3 days, you sell them back at a cheaper price, or you buy them at a cheaper price and you give them back to the brokerage, which is basically covering. Okay. So now let's try to put it in terms in a way that most people can understand, that for those people that are not in the stock market. So let's say when you're trying to buy a PS5, right? The PS5 was coming out, it's a hot commodity. You got in line at Best Buy or whatever, and you bought them for like $500, right? Whatever the retail value was. But when you go on eBay, you see that it's going for $1,500 to $2,000. You're like, wait, I could just sell this and make profit and then buy more when it comes out, right? And to add to this story, let's say you work at Best Buy, so you know when the inventory is going to be coming in, right? So you're taking advantage of that, right? Because you have those ties with Best Buy. So you sell your first one for profit, you go back on eBay and you list three more that you don't have, but you're expecting to buy them at a cheaper price at Best Buy because you work there and you're going to get that upper hand deal, right? So you sell 3 for $1,500. Now you need to cover your position by actually getting the physical PS5 and shipping it, right? You take in your profit, but you haven't shipped those products to those people, so you haven't covered your position, right? So eBay has it that you have sold these products and the person that has bought them for $1,500 is waiting for the products, and you go back to Best Buy, get those 3 PS5s, you get them for retail, and then you sell them for that crazy price, right? And that's what people do with shoes. They buy it for retail and then they sell it after the fact for a higher price. But now let's talk about what shorting is. Basically borrowing stuff that you don't have and then expecting to buy it lower. So let's say you did the first transaction, you sold those first PS5s, then you sold those 3 PS5s, and you're like, wow, I'm making guap. Let's go sell 10 more. But this time, after you sell those 10 PS5s at eBay, when you try to go back and you try to cover your position, Best Buy tells you, oh, our shipment that we were supposed to get at this date, we're not going to be able to get it. We're completely out, right? So now you have to try and cover your position by selling those 10 or shipping those 10 PS5s back to the people that have bought them. But you don't have 10 you don't have any at all, right? So now 3 days have passed, and since you didn't cover your position from those 3 days, you're considered naked, right? Since 3 days has passed since your sale and you haven't covered, meaning you haven't shipped those PS5s, you are now considered to be a naked short, right? And it's supposed to be an illegal thing where you're not supposed to be doing that, but obviously these hedge funds are doing that in the back end, right? And now that's what a lot of the Wall Street bets are alluding to, saying that for the fact that there's a lot of naked shorts with AMC, if we just keep holding, the price of the stock is going to go higher. And their calculation is that since there are no more shares to be had, the hedge funds are going to have to buy back the shares from the market. And as they do that with the market, the price is going to go higher. So for the example with the PS5s, you sold those 10 on eBay for $2,000, right? You try to go back to Best Buy, buy them for the cheaper price or whatever. Since there's no more, you have to go on eBay and try to buy them from eBay. So now you're bidding on other people's value of those PS5s. And as you do that, you're driving the market higher. Since it is a free market, the price of that product is going to go higher depending on the demand. Since you have 10 PS5s you need to cover, you need to buy 10, and every time you buy a PS5, the price goes higher and higher. And that is what's happening with AMC. And they are speculating that there are naked shorts, meaning there are hedge funds that have not covered their position yet. So as soon as they cover their position, this price of AMC is going to go higher and higher and higher as they close down their positions, okay? But obviously, that's a lot of speculation. What we do here on Money Movers is we trade based on technical analysis, all right? And right now, the technical analysis says it looks like it's wedging. The key levels to watch are going to be this $50 level. And then if we really wick back down on Monday, the key levels to watch is going to be this key level right here, this wick level of 37.53, okay? If we don't hold that 37.53, we could easily go back down to the level of 30 and then maybe even to 25, right? That's, you know, the negative outcome, the possibility of going downward. Now let's talk about the most optimistic outcome, because I think that's what everyone is looking for. If we break this $50 strike and we continue and we break this level of 53.54, we could easily go up to the level of 65. But if the speculation of the Wall Street bets is true and there are actual naked shorts happening with AMC, the price of the stock could really, really go to the moon. We usually don't trade speculation. I personally don't like trading speculation, but when it's this good and there's money to be made, what you should be doing is buying them at the support levels, okay? When you buy something at the support level and the stock runs up and it comes back down, it's going to stop at that support level as more buyers pile on, and it gives you time to exit if you want to exit a position. That's why it's very important to have that support instead of buying it at any random level, okay? So $50 is going to be the level I'm going to be watching going into Monday. Hopefully this naked short thing is a real deal and actually happens within the market. But regardless of that, watch your technical levels and make sure you have a stop loss, because you don't want your portfolio going red and bleeding out just because someone told you to buy and hold a specific trade. Always trade within your limits of cash value, and always have a stop loss so that you can live and be able to trade again. But yeah, with that said, I'll catch you guys on the next one, and let's see if Monday's gonna be the deciding factor for AMC. Hoping for the best, but always be prepared for the worst. All right, catch you guys on the next one. Deuces.